Hi everyone. Today I'm going to be talking about the institutional adoption of Bitcoin. You've probably heard this word used before, but you may not know what it means. This is a huge step forward for Bitcoin, for its adoption, and I'm going to dive in on it. All right, switching over to my screen. This shows the Held Report. The Held Report is a newsletter that I send out every Thursday. If you want to get it first, you got to subscribe. The link is here and also available below. This is where my thoughts on Bitcoin on these different topics comes out first. So Thursdays it comes out in the morning, but now we're going to go ahead and dig in on it. So what are institutions? Well, most people think of institutions as this: guys in suits, impressive looking buildings, and you're not wrong. That's actually a pretty good characterization of what institutions represent. Now, they typically include a kind of a wide swath of different types of businesses or service providers or participants in the economy. So this includes central banks, sovereign wealth funds, different types of banks like commercial and investment banks, brokerages, and insurance firms. But in crypto, the term institutions actually is a little bit more broad. So this also includes hedge funds and corporates in terms of how this word is used in the Bitcoin and crypto community. So back in 2017, during that bull run, a lot of folks were championing the meme, the institutional herd is coming. And that wasn't wrong, but it was too early. But as COVID roiled the markets, institutions then searched for a safe store of value and found that Bitcoin was a good, viable alternative. And so that's where the last year we've seen the herd of institutions rumble into Bitcoin. And here's who jumped on board. So on the macro trader side, we've got these are some of the top minds in the macro hedge fund business. Now, the term macro means that they trade based on economic and political views of countries and how those shift. So they trade on monetary policy and amongst other things. So these are some of the brightest people in the world who trade based on like governments making decisions around printing money or not. And some of these are pretty incredible, like Paul Tudor Jones saying Bitcoin is undervalued relative to gold. And Stanley Druckenmiller saying that Bitcoin is like, it's an attractive new asset as a store of value for the younger age cohort. They're starting to realize that gold is fading away and that Bitcoin is being globally recognized by these folks as a gold 2.0. I bought Bitcoin 8 years ago with this premise that eventually the world would come around to this realization, and that's actually happening, which is wild to see. You've even got folks who are more skeptical, like Ray Dalio. Ray Dalio is a legend. He's recently been a little bit skeptical about Bitcoin's long-term survival, but he does recognize that it has proven itself over the last 10 years, that it hasn't been hacked, that it has grown a significant following, and that it is an alternative digital cash or digital store of value. Just that recognition alone is huge and in stark contrast to what we saw comment-wise from folks 3 to 4 years ago. And then Guggenheim coming out with a very bold statement that Bitcoin should be worth $400,000. So I'm not going to read through all of these, but you get the gist of this is a really big shift in thinking, and this is incredible. Now, investment banks. When most people think of banking, they think of investment banks, and these are the quintessential Wall Street types, right? This is what people envision Wall Street like I showed this image. So this was, I think, the most surprising that I've seen happen over the last 6 months, seeing these investment banks, change their tune. For example, like Citibank recently saying Bitcoin is at a tipping point. It could become the currency of choice for global trade. Deutsche Bank, Bitcoin's market cap of $1 trillion makes it too important to ignore. These are incredible statements to come from its investment banks. I mean, again, 3-4 years ago, they wouldn't even let anyone in the building to come talk about Bitcoin. Was almost the vibe that they had. I'm sure that they did, but this sort of gives you a perspective of how they treated it or how they treated Bitcoin back in the day. JP Morgan saying a 1% allocation actually makes sense just from a pure portfolio perspective. Jefferies cut their exposure from gold and put it into Bitcoin instead. I'm not going to go through all these, but these are incredible leaps forward in Bitcoin's perception in the world. And then finally, corporates. So you've probably heard about MicroStrategy putting $2.2 billion into Bitcoin. This is a website, by the way, that monitors all of the treasury balances of different Bitcoin companies, which is really, really cool to see. So we've seen MicroStrategy jump in and buy Bitcoin as a replacement of dollars or treasury T-bills or other safe stores of value. These corporates are now replacing that with Bitcoin instead. You've also got PayPal, who launched the ability to buy and sell Bitcoin, and they're really leaning in on providing more services for Bitcoiners. Same with Square. With the Cash App product, which has been around for 2 years, you can buy and sell crypto. And Square also bought Bitcoin and put it on their balance sheet. Tesla was a huge one. They bought $1.5 billion of Bitcoin. So each one of these, I think, represents a distinct shift, in the macro traders, investment banks, and corporates. These are huge monumental shifts in thinking from what we saw even as little as a year ago. So I'm highlighting this so people understand how important, and I'll get into how important the institutions are, but this is a huge distinct shift, which makes this bull run much different than the other ones. Now, this collage right here was put together by Documenting Bitcoin. I highly recommend everyone follow this account. It's a great account. They're really funny. They pull together all the top pieces of content in the space. He did a juxtaposition of their original perspective. These are investment banks and like Visa and other companies versus their new perspective. JP Morgan or Jamie Dimon calling Bitcoins a fraud. Now JP Morgan says Bitcoin could make sense as 1% of your portfolio. Morgan Stanley says Bitcoin's real value could be zero. Now Morgan Stanley becomes the first big bank to offer its wealthy clients access to Bitcoin funds, and so on and so forth, which I think is hilarious. Bitcoin hasn't changed at all. They've just come to realize Bitcoin's value. We have so much more of this bull run to go as the world is just now waking up to Bitcoin. All right, so why is this important? Why do we care about these macro traders, investment banks, and corporates? Well, without institutions, Bitcoin would be relegated to being a niche asset held by few individuals who have no influence over global finance or politics. Bitcoin's survival is dependent on adoption. We need people to be able to buy Bitcoin with their 401k, IRA. We need folks to be able to better understand and grok it. And these institutions are an important part of what people need to have something be socially validated. A lot of people still trust in institutions, and this is an important step forward as Bitcoin becomes more and more recognized as a gold 2.0. And as it does, it fulfills its purpose of becoming a gold 2.0 because the faith in it, the belief in it is what drives the price, which is what drives adoption and awareness. And this is the viral loop that comes from that. On Bitcoin's adoption curve, we're still very early in the cycle where we are transitioning to the store of value phase. So store of value, store of value is recognized as a gold 2.0. I'd say we're a little bit farther along this chart. This chart's a little bit older, but we're probably right here, right about to go over into the store of value phase as being a globally recognized store of value. And this is a huge and important moment that requires the institutions to come on board. Now, institutions manage over $100 trillion, and some of that is now flowing into Bitcoin. As they buy into Bitcoin, it reduces the availability of Bitcoin to purchase. Some people hypothesize that this is represented by the balance on exchanges, or the Bitcoin balance on exchanges, and people are calling for the supply squeeze, which is all of these coins, they're being what is hypothesized is these coins are being bought by institutions and moved to their own custodial solutions. Now, a more concrete way to look at this would be Coinbase's S1 data, which, by the way, the Glassnode is where I pulled this data from. This is Glassnode Studio. You can look at a bunch of different metrics, which are really fun to look at. Here's Coinbase's S1 filing. You can just Google Coinbase S1. And with Coinbase's S1 filing, it's a public filing. It's a filing to go public, and they provide information to investors. And so this was a chart that they shared, which showed their institutional trading volume in dark blue versus the retail trading volume in the lighter blue. And what's cool is we've seen in 2019, and now we're starting to see the huge surge of institutional investors coming into the space. This is explicitly evident in this chart. Sorry. All of this explains where Bitcoin is, why we're seeing the price rise, and why institutions are important. They represent the next stage in Bitcoin's development. This is a huge, huge moment. This could lead to something called the Bitcoin super cycle that I've hypothesized about, that this cycle is different. Every other Bitcoin cycle didn't have institutions. We didn't have the sophistication. We didn't have the trading infrastructure. We didn't have the narrative down. We didn't have the ease of use. All of that's changed now. Also, COVID brought into sharpness Bitcoin's value prop and why it solves a problem. So I think that this makes Bitcoin, this bull run, particularly important, where maybe we see the bull run be really, really intense and really, really much larger, or we could see a less intense bear market where we see it somewhat muted, where Bitcoin's price doesn't dip 80% after the peak of the bull. You can read about that I'll share a link below, the Bitcoin super cycle, which I wrote a few months ago. Hope you enjoyed the newsletter. If you like this, share it with your family and friends. Again, if you want to get this first on Thursdays, subscribe in the link below. Thank you for watching. Cheers.